Most people are wildly and badly miscalculating and misestimating what their future mortgage payment's going to be, especially first time homebuyers. This one simple miscalculation can result in your mortgage payment being hundreds, if not thousands of dollars higher than what you were initially anticipating on paying each and every month. Now, what's the source of all the trouble? It's this thing that we like to call escrow. Before we talk about escrow, let's talk about what makes up your mortgage payment. Most everybody knows and assumes that when they get a mortgage, they're going to have to pay the principal and interest for the amount that they are borrowing each and every month. Where most people get caught up on is that they believe that they are only responsible for paying that principal and interest that is due against the money that they are borrowing. Countless people forget about the other portion of their mortgage payment, which again is the escrow portion. To put it very, very simply, your escrow is your property taxes and your insurances that are required to be living and financing your future home. Now, how does escrow relate to my actual mortgage payment? The bank that currently owns your note, owns your loan, will have a escrow department that is in charge of paying, again, your property taxes and your required insurances. Now, they most likely will be paying this yearly or annually, but in order to make sure you don't catch yourself in a financial bind at some point later down the road, these servicers or banks will take your yearly premiums or your yearly estimated property taxes, divide that in 12, and add that amount to your mortgage payment. Again, this portion of your payment is called escrow, and it handles your property taxes and insurances. The other portion that most people think is the only portion is just your principal and interest. Now, who pays escrow? Unfortunately, most people are going to be required to pay escrow when they first get into the house. Unless you have the ability and means to put 20% or more down on a standard conventional mortgage loan, you're going to be required to have a escrow portion added to your monthly payment. And again, depending on where you live, the value of your home, and many other countless different factors, these amounts can result in your mortgage payments having a few $100s extra to maybe even more than $1,000 plus added to your actual mortgage payment that you are responsible for paying each and every month. Most online mortgage estimation websites do not account for this escrow payment in their calculations. Because of this, many people that I deal with on a daily basis come to my office and find out that their actual real mortgage payment is going to be a lot higher than what they saw online, especially when their estimate came from Zillow or any other type of home buying website. Thus, if you are looking at buying your first ever home and you want to know exactly how much it's going to cost you each and every month, my best advice would be to get with your lender, or heck, get with me myself. I would love to look at your home specifically, determine what those escrow amounts will be, and give you a realistic, honest estimation on what your true and real mortgage payment will be each and every month. Hope this helps, guys. Follow me to learn more.